How do you see the asset classes actually? Equities is one which you're playing. You have gold and silver, which is now the favor of the month or favor of the year, and we just saw
which is making equities look so bad right now.
And sovereign gold bond redemptions that happened yesterday at 338% returns, and that's exclusive yearly interest which has to be paid as well. How do you see gold, silver playing out?
Yeah, great question. Thank you for asking me that. I think if you're a trader or a speculator and you miss the gold rises, I did, for example, you have a sense of FOMO if you're trading or speculating. But if you're an investor, Warren Buffett once famously said that if you own an ounce of gold and hold it to eternity, when eternity did arrive, you would still have that 1 ounce of gold.
Yeah.
So let me give you an example of that. In '93, if you bought an ounce of gold, it was like $400 an ounce of gold. At the same time, you invested in an IPO of a company called Infosys. You bought 100 shares for 9,500 rupees. It came out IPO of 95 rupees. Today, that 100 shares of Infosys, that gold is still 1 ounce, 40 years later. But 100 shares of Infosys, how many shares have become? Can you take a guess? How many shares of that 100 shares of Infosys with splits, bonuses, how many shares has that become today? This is, for, I think, 30 years later. Take a guess. Well, I'll tell you this thing. It's over 3 lakh shares,
okay.
Aisha. It's over 3 lakh shares, the amount of bonuses and splits that 3 lakh shares. But here's the math that gets crazy. The 3 lakh shares at 1,500 rupees a price, give or take a few bucks, is worth 45 crores in your portfolio. So that 10,000 has become 45 crores. But that's not even the most exciting story. The most exciting story is that every year you get a dividend on 3 lakh shares of 1 crore 25 lakhs. Every year on the 10,000 investment, the return on capital is 1 crore 25 lakhs. I can't even do the return on capital invested in that share.
I don't know how many zeros that will come to.
But the point I'm trying to make is that sometimes all that glitters is not gold. It is stocks. And I think it teaches you that stocks should be, it's important to get stocks right, to pick stocks, to hold it for a long period of time and to see businesses mature over time. So I'm saying that, you can say very well that, well, gold has done well in here. It has done well, and if you're a trader or speculator, obviously you should have been in gold out there. But if you're not, there's nothing to fear. That if I were investing for my grandchildren, as I do, Veer and Arna, who are 8 and 6, I would be buying them common equity because that's where maximum appreciation happens over a period of time. I think long-term CAGR for gold is about 3%. Long-term CAGR for, in dollar terms for for Indian equities about 10-11%. Where would you want to put your money if you're looking at a 10-20 year horizon? It's a no-brainer.